Let's get to Top That Trade. Joining us now, Knuckman, the Chief Market Strategist for BullseyeOption.com, and Phil Flynn, a Fox Business News Network contributor. Here we go, guys. Round number one, Dairy Dilemma. What's the better buy, a butter stock or cattle?
Well, it all comes back to butter and eggs, actually. And Phil can tell you, because when we were young traders, that's how the exchange started. It was a butter and egg exchange. And now we've got all of this. So the price of butter and price of eggs have always been a good indicator of what's going on. And eggs have jumped in price. And I look at the store, they put a sticker on the window because it changes every single day, which is pretty interesting. But butter is also up 20% in the last year or so. So it's going to hurt baking season. So that should be interesting. Will that have a negative effect on sugar? Because if you're not baking as much, will sugar demand go down and therefore sugar prices?
The bigger, the better, the butter, the better, the better, the better. I think that wasn't there a poem like that, or maybe it was a commercial, but yeah, butter you're right, Alan. Butter used to be a major staple in homes across America.
Well, I love butter.
Who doesn't?
Everybody loves butter. Everybody loves butter.
Right? Except for people who like margarine, but those people, come on. Anyway, but butter is huge. And it basically, when you look at the cost of butter and dairy in general, it's gone through the roof. We've seen record prices for cheese, record prices for butter, and as you say, record prices for eggs. So as an investor, when you look at this, you really want to look at who is going to be able to survive the higher, inflation stuff. And actually, I think grocery stores are actually going to do okay in this environment because they're able to pass on some of those costs right now. And so I would look at your Kroger stocks right now. I think they look very attractive at these levels. These high prices may stay for the butter a little bit. But if you want to make your holiday cookies early, we will sample them and let you know whether they're good.
Mail them in. Mail them in.
Absolutely.
Round number two, peak pop. BlackRock analysts see the stock market booming after the inflation peak. Is that possible? And what's your play?
Of course it's possible. Anything is possible. And we've been talking about this, higher interest rate environment and concerns about inflation over and over and over again. So it's not unforeseen. Markets factor these things in. Now, let's see how we react at the bottoms and see what the next move is. But anything can happen, and it's happened in past history. So I wouldn't discount it.
The reason why the stock market's facing such turmoil is because the market's been broken. It's been broken because of Federal Reserve policy, getting behind the curve, inflation, government spending. But I think what BlackRock is saying, the process of pain that we're going through is going to solve a lot of those issues. It's going to fix what's broken. And once you fix what's broken,
we need some tough love.
Upside, right. So once you fix what's broken, you shake out some of the weaker players. Once the economy is broken, it means a much stronger rally. Now, listen, consider this. The last time we really had a major market meltdown other than COVID was like 2008. Everything was broken, a lot worse shape than it is today, right? Banks were broken. Right. Lending was broken. But look at that. When we went through that pain, they fixed that. We had the biggest stock market rally in the history of the globe.
Round number three, cool homes. Home prices cooled in July at the fastest rate in history. What bullishness would you build upon?
I think actually the slowdown in housing is going to present some really good opportunities. If you can afford the interest rates, some of the properties that were overpriced just a year ago are probably getting in line with being underpriced. And so real estate on this pullback is probably your best bet.
Turn your frown upside down. Embrace these higher prices because most people have a house and they had a chance in the last few years to position themselves like never before. You were able to buy such a bigger house than you've ever been able to buy in history and qualify that because of low rates. Yeah, that's gone. But we're just back to normal, what we were at from 1970 to 2010. That's where we stand.
So if you turn your frown upside down on your pumpkin, make sure there isn't a candle in it. Just safety, in the season.
Here's your bonus round question for today. The Costco hot dog and soda combo. The CFO says that $1.50 deal will never change. How can that be? Is it because food prices will never rise? The rest of Costco's business is so good the retailer can afford to keep the prices same, or just that we all love hot dogs?
I think it's number 3, but the answer is number 2. Yeah, I saw that.
You know, they viewed that hot dog sale as a measure of their success and people and their business model.
We have 2 winners. A couple of winner chicken dinners are coming your way. Go to businessfirstam.com for where to see our show on TV.